If you would go ahead and type the number 1 in the questions box to let me know you can hear me, that would be fantastic. Nothing worse than speaking to myself for the next hour or so. Well, thank you, thank you, thank you, thank you. I appreciate it. How you doing, Debbie? It's been a long week, Debbie says. Doing good in my trading, though, but this sideways stuff, yucko. Oh, yeah, it's killer. Yeah, Scott says, hope your internet is a little better than Bill's was today. Yep, I hope so. I do hope so. Well, I'm glad y'all having a good day here today. Glad to see a little participation. It has been a little while since we have gotten together. The last 2 weeks have been kind of crazy. I was originally scheduled to teach the Traders Camp and then got stuck in Chicago for 3 extra days and wound up there, instead of coming home on a Friday, coming home on Monday. So Bill wound up teaching that class. I still had to dig out, so there was no way to get this this class going here. Yeah, Scott said you had to move to Chicago. It wasn't my choice, that's for sure. There you go, Dennis. Hope you continue to improve in your health. Yeah, it's things are good. I'll tell you what, I'm impressed with everything about it. So I'm happy with the path that's going on right now. So I appreciate the comments and the thoughts there, folks. I do. So let's do this. Let me go ahead and get this disclaimer thing out of the way. Basically, it says I am not an advisor. I cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which the Securities and Exchange Commission requires you to be licensed in order to do so. I am not and do not want to be. So if you find a candidate, indicator, setup, something, anything that you like here today, my suggestion is you paper trade it first before ever putting 1 penny of real money into the trade setup or indicator, and then and only then would you do so if it fits your own personal risk profile and risk tolerance. Now, keep something in mind. Because I'm not an advisor, that means I'm not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. All right. So, hope you guys had a good trading week this last week. Let's go ahead and start off with a quick look maybe at SPX. And yeah, we'll go right in here at SPX. So, you know, nice move on Fibs. Didn't actually do anything yet today. Let me do a quick update today, intraday, and we'll get some an update in there. But guys, this pullback we had in these last 6 or 7 days, you know, last week, as Debbie said, all sideways, right? Except Friday. And it's just kind of blah. But this pullback, in my opinion, wasn't steep enough. It should be further down. And I'm wondering, as we get into, I talked about this in Market Insights yesterday, as we get into this downtrend channel on the SPX, if we don't get a failure and just continue back from there. And that wouldn't be a bad H pattern off of the 50% tile, but we really need the move to be down to that 1600 level is the minimum we need to see the move down to. It is right at the 1604, 1600, right in that area. We've got great confluence going on in there. Very important level for us from a previous fib, and I know it's very light. I purposely have it that light blue. I don't want it sticking out. But that 1600 level, to me, would be enough of a pullback from where we focused on this change in direction, where we really started to pull up in the mid to third quarter of 2011, and just ran from there. And we've had this great pull, and then this pullback here, this first pullback was 236% hesitation point, right? The next pullback, we just pierced through that, and we need to be down here. We need to get down to that 1600 level, in my opinion, is where I'd like to see it get to. And in a perfect world, 1479, 1500, somewhere around there would be the pullback. Yes, it's going to be painful. Yes, it's going to cost some money. But I think stocks are very much overvalued. Many stocks, not all, many stocks are very much overvalued. And even these pullbacks have been helpful. I mean, it's nice to see a Netflix, as an example, you know, back at $96 instead of $133. It's nice to see that, but that's not every stock. And you got to remember, if you go back and look at patterns, you could see the moves, and we've had tremendous moves on a Netflix, from $45 up to $130. It's a little bit of a difference, right? A little bit of a run. Bruce, I am not sure if I'm going to be in Charlotte yet. I'm assuming that's a March event. I don't remember it for February. We have not yet received the March schedule yet. So now that we hit February, we should get that March schedule fairly soon. And when I say we, I know it's on the website, but as far as coaches go. Yep. All right. So guys, what stocks do you want to look at? What positions do you want me to pull up? What things you want to take a look? And actually, let's go a little bit of a different direction too. Tell me how trading's going. Tell me what's going on with you. Are you making some trades? And I don't care if they're funded or non-funded. Really doesn't matter very much to me. I'm more interested in, are you making them, period. So if you would go ahead and do that and just drop them in the questions box there, that would be great. Just so you know, we in the E-mini Trader Talk, that's one of the things that we do in there, is we ask the questions of who's trading what are you up to, how'd the last week go as far as trading, right? That's very important to me. So let's see what we got there. All right, so we got a couple of symbols. Bruce said just paper right now, that's fine. Scott said I'm doing a lot of earnings plays the past 2 weeks. And it makes sense, right? Because of the time of the month, of the quarter. We're in that earnings season right now. Rose said just practice trading only, and that's okay. I'm not asking for a justification of why you're not, or any of you are not trading real. I just want you to trade, and if it means non-funded is what it takes to get you going, then that's fantastic. Victor said paper trading gaps close. I like that setup, Victor, by the way. I think it's a great setup. Teresa have been doing day trades due to 1 day up, 1 day down. Right, so Teresa, we adjust to the market at hand, right? Jim said made some money on Netflix, lost a little on Amazon. Day trades, okay, on those two. Excellent, good. So, Debbie, you changing parties here, or what's going on? Did you just shift from Republican to Democrat or something? Or, I mean, what caused you to put in ES as the symbol instead of the YM? That's just unheard of for you lately. When I asked for symbols you guys want to look at, that was what Debbie put in, was ES. Let's see. Ed says, I've been having trouble with my money management planner. It seems that when I paper trade, I have no trouble getting out of my trades. But when I trade live with multiple contracts, I have trouble getting out of all of my contracts at once. Is there a fill or kill option on live trading, or as to get out of all contracts at once? Well, Ed, as you put your order in and you are in a money management planner in any non-funded trading account, once it hits your price, it's going to fill. It doesn't necessarily look at the number of contracts available. It fills. So if you have a smaller number available at the price you're trying to exit at, you may not get the fill there. Now, I don't know if that's necessarily the problem, but that is a potential as to where you may be seeing it from. This is on the YM, Ed? Yes? Okay. So maybe we'll go a little deeper into that tonight. Are you going to be in the Trader Talk this evening, Ed? Okay. So if you are, then yes, Daniel is presenting tonight, Scott. That is correct. So I've had a bunch of people say that they were coming just because of Daniel teaching tonight with his double Bollinger Band strategy that he's come up with. Let's see. All right. Yeah, Ed. So if obviously it's recorded for those of you that are subscribers. Those of you that just come to a single class, you just get the live class. But all right. So Debbie said trading mostly ES in the futures. A little afraid of Oil, been incorporating range bars with ticks using 50 and 5-minute candles. Okay. Traders Chat is tomorrow. Scott, that is correct. I try to do them on Wednesday whenever possible, but being that I travel Wednesday heading to Jersey, yes, it's not far away, but I also didn't want to leave after 10 o'clock at night to get there. So, especially with all the construction going on in the evenings. So yeah, we do that, the Traders Chat. For those of you that are in the Market Insights with me, you should have gotten an email today, I believe. It went out. You should be registered for that class now. Actually, let me just take a look and see if everybody's registered. Because as of this morning, none of you were registered to it. I asked them to get it done. Yep, they're in there. All right, so everybody's registered for the Traders Chat for tomorrow. So that's all done. Got it. Okay. Yeah, a lot of changes there, Scott. Okay, so symbols. Let's see, I got to scroll back up. All right, first one came out by Rose, which was Alcoa, AA. All right, so I'm going to zoom in on it. Now, for those of you that don't remember or are not aware, Alcoa is the, when you look at Alcoa, when their earnings are coming out, they are the unofficial start of the earnings season. When Alcoa announces, they're pretty much the first one that anybody pays attention to, all right? So I've got a fib drawn on here, but it needs to be redrawn, so we're going to apply a new Fibonacci from here to here on Alcoa. Now, the tough thing for me with Alcoa is just price. You don't get big moves. Let's see. Coming over here to Alcoa, you know, yes, not big moves on the price of the position itself, but also just when you're looking at the options, right? If you look at the stock is at 717, we've got half-dollar increments, right? So the $7 strike for this week is 24 by 29, 65 delta, plenty of open interest. It's just, there's not a lot of room in there. Now, granted, that 24-cent option or 29-cent option, if it moved one strike price, which is 50 cents, it has a difference of about 30 cents, 35 cents or so. So you definitely can get some increase. I mean, that's near a double with a one strike price move, which is 50 cents. But Alcoa as a whole only moves 41, and well, I'll call it 42 cents a day, so it's not big. So if we look at where it goes to, downside, we've got that 7-Eleven right there, and then $6, 6.14. On the upside, 7 3/4 and 8 1/4. So again, even there, small dollar amount movements inside of there. All right. So not a bad chart if you're looking at that bearish trade. I'd look at it under 7-Eleven and then move down to 6.14. So there's almost a dollar in there. But I would also consider possibly scaling out of half of the trade in the middle, maybe, right? Just to give me a little bit of wiggle room. So if I go and add the 118, that might be a place in Rose to scale out of half of the trade. All right. Next one was Debbie had asked for the ES. So I've got a template set up for ES right here. So we are still trading the H6 contract. Remember, guys, this expires in March, third Friday of March, but not like a regular option does. There's different timings on it. So be cautious of that. But it does expire in March. So I'm going to maximize the daily chart of it first. Let's take that down. Well, let me take that line off of there. And we had this nice fib drawn in here, but now we need to redraw fibs. So let me pull that back. Okay, so we're going to grab the drawing tools again. We're going to come from this high, got Fibots in there, so let's change that. We're going to come from this high right here down to this low. Now I'm going to do an auto on the extending lines. I just wanted to extend it right to the far right of the page, and it will continue to extend. It's a daily chart. I'm not concerned that it's going to get in my way. 5-minute chart I am. So right now, you look at the daily chart of the ES, what's going on? ES is the S&P 500. Great move down, reversal back up, kind of vacillating there. Big pop yesterday, and today we're kind of hanging out. We're just above the 21-period moving average. Just like on SPX, I talked about it being at the 50 percentile. I'd like to see it stretch up to the 1940-ish level before rolling over. I just don't know if we're going to see that happen. But we did push above the moving average, the yellow, the 21, for the first time in quite a while. You know, month-ish. Right? This goes back to, the end of the month, so the end of December. So about a month since we've pushed up above that moving average. If we roll back over from a bigger picture, Debbie, I'm looking to the move 1907 and 1868. Now, we do need to have another line at 1900. Right, so we'll put that there. All right, so that 1907, 1900, excuse me, potentially down to 1868 as our reversal. If we do get under that 1907, we're going to hesitate at 1901, 1900. Oh, look at that. Confluence of the 8-period moving average right there. So now we look at it from a day trading perspective, and we go to the 5-minute chart. Right? If you look, it's Monday, right? So if we go and look at Sunday night, so there's where we opened up on Sunday. And here's the shift over to Monday. So you can see we had some drift down, lower highs setting up in there, lower lows, just keep drifting. If we go and look for, that 3 a.m., 2 a.m. time period, so we're seeing lower tops. We just focused on those three right there. We're seeing lower highs right in there. Now, if I go ahead and extend that line automatically to the right, right, just from that, if you just focused on those three tops, we failed right there again, kept pushing down. Now, you could have made an adjustment potentially later. We got rid of the extend automatically. And you could have said, okay, if we try to pick up this top in there and this top in here, yep, we kind of missed it there. But just off these three, 1, 2, 3, if you're looking at the European market, if you were up at 3 a.m., 2 a.m. this morning, that push back up was right at 3 a.m. is where it failed. Big failure right at 3. Lower high, couldn't make it up to the resistance level, came back to resistance again, failed, lower lows. Everything about it was fantastic. Debbie said no insomnia trade last night. I think it was only a 15 to 20 point rectangle. Right, it wasn't huge, but it was an overall nice move. And this drop, that drop on ES 1928 quarter down to 17 and called 17 and a quarter. You got an 11-point move on the ES, which is a really nice move setup on the ES for that size. Scott said it's almost like we need to be in class at 3 a.m. Yeah, Scott, I'll tell you right now, I brought it up in Chicago while Sylvia was there about doing a 3 a.m. class, and no. And she said no. It was adamant, no, we're not doing it. at all. No, I wouldn't say that, Scott. At all, I wouldn't. She's not wanting to get up that early and have to work all day long. I know. Just remember, she can read your comments, Scott, so be careful. So then, guys, what happened? We had a nice pull down, most of the morning. Let's go find the 9:30 market open. And when I say that, I just mean by, snapping a line on it. Right there is our open for 9:30 a.m. Just kind of sloppy, up, down, bottomed out, kind of a double bottoming pattern there, and a little bit of a bounce, and it's been chop all day long. It is a tough market. Scalping, to me, short term, in and out, trends, rectangles, moving average crossovers, maybe depending on time of day, because if you look, this moving average crossover right here came after another moving average crossover here. So if we do it this way, you had a moving average crossover take place right here, right there, and right in this big green candle. So right here on that candle, right? So if you look at the pattern preceding it, to say that moving average crossover took place right there, that's tough to say I'm going to take it. And then it came up to the downtrend line and failed. All right, well, now it broke out, and what happened? We just went sideways. So it has been an iffy morning, to say the least, right? It's just been kind of yuck. Right, there you go. Scott put it in just as I said it. Jones said people can trade in the early AM and then talk about their trade in class Monday at the regular time of class. People can trade in the early AM and then talk about the trade in class Monday at the regular time of the class. Yes, Joan, and that's the great thing about the E-Mini Trader Talk is coming in there, whatever you did today, you could talk about it this evening because I asked that question right up front. Tell me what you guys are trading. How are things going? What's going on? There are questions of I did this trade today. What did I do wrong? What could I have done different? There's the place to answer them because they're trades that you're usually completely out of. So, guys, it looks like we may get a crossover on the moving averages right now. It might be one more candle before we get the cross. This has been a big bar move, but do you trust it? Look what's happened before. Big bar move with a long wick. And I'm referencing this bar right there with the green up arrow to it, right there. Look at where that long wick came down to. Right now, we're back in the exact same spot all over again. How much do I trust it? I don't know. Is it just playing games here? Now, give me a roll back up to the moving averages and close there and fail. I'm liking that. That's 23.5 with a move down to 21.5. So there's a 2-point move, 8 ticks on the ES. So there's definitely some potential there. All right, so we'll come back and keep our eye on it and see what's happening there. But just watch that candle, guys. Maybe not. This may just be a fail right here. Tough to take with that big candle after seeing that big wick, though, and with as sloppy as it's been. And then, guys, all of these long wicks here, that's the only thing that I have problems with personally on the ES is when they become wicky like that. And that's exactly what I call it, is wicky. Not what I wanted. Let's see. Okay. So it has been the same on the YM today, though. The same type of sloppiness taking place on the YM. Debbie said, do you always wait for the pullback? I do, Debbie, because I don't do well on breakouts. My breakout trades, that's just not where my strength is. So I miss a lot of trades by not taking the breakout, by waiting for pullbacks. But the wait for the pullback gives me personally a much better chance of being right in the trade. And again, I'm not saying that that is the only way to trade it at all, by no stretch of the imagination. But for me, it definitely works better. I did not get them, Daniel, at all. Can you send those slides to support at BetterTrades.com? Kay, are you hearing me in here? All right, so let me make sure the admin is hearing me then, Daniel, because I want to take them in. What did you do them on, Daniel, the slides? Did you put them on PowerPoint, or is it Word, or what did you do? It's a JPEG? Okay. That's fine. I just want to put them in a PowerPoint, which is an easy slide set for us to work with in the class. All right, if you could send, yeah, I don't know if Amelia is here. I see she's not on schedule today, so I don't know if she even saw them, Daniel. I don't know if she is under the weather today or what. All right, so Kay, is that for Stan and load the slides for tonight's class? Yeah. Okay, so I'll talk to Stan. So Daniel, it looks like we got them. It looks like we got them. Kay said they were sent off to our guy to approve and send them off. Okay, so what Daniel's referring to, guys, is tonight Daniel will be teaching in the E-mini think tank. It's not a trader talk any longer, it's a think tank. He'll be teaching inside of there his double Bollinger strategy and the way he deals with his traps, similar to what Ryan taught in his equities. Daniel's taken some of that and incorporated it in his futures trading. So he's going to be teaching that this evening. And that's the biggest difference about what I do in the E-mini class, the workshop, the think tank. That's why it's a think tank and not a trader talk, is I have students coming in that are actually trading and doing the same types of things and teaching what they do. DC Jim is here and said, guess who's going to be with you tonight in class? That is cool. I look forward to it. Excellent. All right. Let's see. And then I saw a couple others come through. Not a whole lot of symbols you guys didn't submit here. Let's see. So I got to back up, guys. So give me a second as I'm looking for them. So Bruce said, Rob, is there a certain day that I can join Monster Market Moves? It doesn't matter when that is, Bruce. The next one is coming up on the 9th, I believe. Yeah, February 9th, I believe, is the next one we'll be teaching. So it's for that workshop, and then you get the 30 days of recording from the date of the workshop. So it doesn't matter what day you enroll in it, but it will be coming up on the 9th is the next one. All right, so then Bob asked for UVXY. UVXY. All right, $40 stock, UVXY, who are they? Pro shares, ultra short of the VIX. Okay, all right, so ultra short, they are an inverse relationship to the market, right? And it's a short position. So let's go and back it up a little bit. All right, so let's see. I've got a Fibonacci already drawn here. That fib is valid. So no reason to change anything on that fib except zoom in on a little bit. All right. So right now we're kind of pinned between the moving averages, right? So it's a neutral bias to me. The downside targets, I'm looking at 35 and 27.5. On the upside, great confluence at the Fibit there of 41.67 and 48.31 is the next upside target. So there is definitely some room for it to move. We are, down today. It's an ultra short. We are down a little bit today on it. All right, but not one that I normally trade. Anything that is the inverse relationship, guys, you need to make sure you have a good handle on charting techniques as well as how that position works. Netflix. Netflix took a little bit of a pop, and I saw someone else's comment in there about Netflix. Let's see. All right, so that was, it's just at the bottom of the page there. So Carolyn said, rumor of Apple buyout of Netflix stock is up. Seems like a good put at 96. What do you think? Okay, so what I like with where Netflix is right now is it's right back to the moving average. So we've been calling bear on Netflix for a while now. Of course, their earnings pushed right up to the moving average and gave a great entry opportunity right there at 109, and we've been down to 90 from there. So about a 20-point move. Yesterday, I said bearish with the pullback to the 8. So Carolyn, if we can close right there, if we can close right at that 5-minute candle and roll over tomorrow, I am very happy with that type of a move for a potential bearish trade. If the rumor is true on Apple, obviously, we'll see the continuation push higher. So that's why I'd want to see a close near that 97.25 and a rollover before taking the trade, especially since the rumor is out and the fact is where people sell. So it's buy on rumors, sell on fact, right? Or sell on the news. News is not out; it's still rumor at this point. So let's see. Okay, so those were both from you, Cal. The Netflix and then the comment about Netflix in there. Okay, I just want to make sure that we're looking at the right. I'm looking at the right person there for that. So for the downside, guys, looking at 94 and 87. Let's see, 87 we don't need a Fibon in there. So 87.5 would be the next downside target. Fibon is 12, so that's plenty of room to go. Let's see. All right, fantastic. So Debbie's asking, what is Traders Chat? All right, Debbie, what I do is every 30 to 45 days-ish, whenever my schedule allots for it, the students that are inside of the Market Insights get to come in there and ask questions. And I do a live online 2-hour workshop. And I think it's the missing piece of a Market Insights because you can ask questions. It's meant to be a video where you get it, 2-3 times a week, you get a video from me. But when you have questions of why did you do it this way, why did you do it that way, it kind of loses its the ability to ask those because it's video. Now, it's much less expensive than a Trader Talk is. It's the same amount of times a week, but for a shorter amount of time. So the Trader Chat allows you to ask those questions. The thing about it is you can come to the Trader Chat for free if you're in the Market Insights. If you're not, and you just said, you know what, I want to be there tonight for that 2 hours, because we're going to be talking about the open trades we have, how do we pick new candidates, if there are any new ones that we've got to change an existing one out with, the education, the setups, and so forth. If you just decided you wanted to do those, you could. They're $249 for the night, for the 2 hours, and then they're recorded for 30 days. The thing about it is, if I do 3 of those in a quarter, that's $750. That's, if you're at a workshop and you get a Market Insights, that's about the Market Insights. It's actually less at a workshop. You're about that same price if you did it on the phone, or at an online class rather. So that Traders Chat is a great way to ask the questions on the equities trades, the equity option trades that we're doing. And guys, the thing about it is real simple. That's our number for 2016. We're up $249,440, $560 away from $250,000 the first month of the year. I have never had a $250,000 month in the Market Insights before. Yeah, Scott says 2.5 million this year. Scott, this has been an exceptional month because of just that huge bearish move. We've had 2 or 3 very strong periods where over a short amount of time we were able to make massive amount of paper trading setups on there and paper trading profits on there in the insights. So do we continue with that? Don't know. But all I know is we should be at $100,000 by the end of the month, and we're at $249,000. We're at 2.5 times the expected. So we've definitely got a little bit of cushion in case the market kind of goes wiggy on us. We did 1,508,000 last year. So, but Debbie, that's what Market Insights is. I'm sorry, what the Traders Chat is. So Vicky is asking if I could take a look at Apple. Absolutely. So there's Apple, little doji candle right there. Good push up. It was in a bearish neutral bias yesterday from Friday's close, above the 8, below the 21. We gapped down right to that 96.45 level today, and we're just hanging. I had Apple down as, what did I have it down as? Bearish below 96. So we're in a bearish trade right now on 96, on Apple at 96 bucks. It gapped down. The open today was 96.47, so as it came back further down is when we were pulled into the trade. So we've got a bearish trade. That 93.25 is our first downside target, and then 90 is our next downside target. Yeah, Scott, something tells me that we're going to kick tail in the market insights this year. We've got a goal of 1.2 million. We did the 1.508 last year. If we get a couple of decent months this year, we could hit a $2 million year easily for the market insights. Let's see. Diana said, Priceline seems like it is going to be a bullish going into earnings. Take a look at it. Okay, so Priceline. So Priceline's overall pattern, Diana, for me, let's do this. For me, is bearish. We've had a nice strong bearish move down, another bearish move, another leg headed down. We did pop a little bit today, but let me see. A couple different questions coming up here, guys. I want to make sure I'm not missing something. So Diana said, Priceline seems like it's going to be bullish going into earnings. Take a look at it, please. So for me, I don't have anything that says, yes, it's bullish yet. Now, could you say I'm going to take a short position, meaning a small position, and go long here because it looks like we may pop? Possibly. But just for me, the answer is no. There's nothing about it that says take a bullish trade yet. And for me, ideally, the 8 has to cross up through the 21, the pink through the green, and the stock needs to be above the brown line. Then I consider bullish trades. Consider. Ideally, I want the pink line on top. So I'm not the first guy to the party, but when I am at the party, it's a pretty rocking party at that point, right? Because right now, we could easily make a move back up to the next moving average, fail, and roll right back over again. Let's see. Yes, Scott says 1.2 million the first quarter. Yeah, wow, that'd be a $5 million a year. Yeah, don't know. We're going to stay with 10 contracts, so that's probably not in the cards this year. So T is asking if I can show an entry with the YM. So are you looking for a scalping trade, just real quick, get in, get out? Are you just looking for me to show any trade just to see the mechanics of trading it? Or are you looking for a high quality setup? Each one of them have some differences to them. So help me understand what it is you're looking at, and I can see what we can do as far as an entry. So Debbie said, yes, let's look at a scalping trade. So Debbie, we're looking at scalping trade, I would be off of, whoops, not what I wanted to do. I would not be on the 5-minute chart, but I would be on the 1-minute chart, right? So if looking for a scalping trade, now we pushed up above the yellow, which is the 21. We've been to the yellow the last attempt, and then when we were flattened off, we were back up above with 2 candles there. So if we can get a move back down below that yellow moving average there, the 21-period moving average, which is about 79. We've got a very small move down to that pink one, which is 74. Right, I'm watching the countdown clock right there at 27 seconds. Now, this is not my type of trade to take this counter trend. The overall pattern has been bearish, at least from 11:45. So for the last hour or so, I'm looking bearish at this point. I'm also recognizing we've done this before, right here. We've been there. We're there again. So if we were setting a trade up in there, that scalp trade could be set up with a 5-tick trailing stop, as an example. Depending on how many ticks we've got on bid-ask spread, we're 2 ticks underwater when we hit enter. 3 to 5, right? 4 to 5, 3 to 5. So it's about a 2-tick bid-ask spread in there. And if you're able to keep your template open and still watch the dome, you can see bid-ask spread very easily. For you guys, I just want to keep it big enough so you can see it on the screen. All right, so there we go, a little bit of failure there. Next candle formed, right? We're back in a minute. Now, if you really want to get crazed with it, let's see, I'll use the 15. We're going to hit 89T for the time frame, and that is an 89 tick chart. Right, so Tom, I use eSignal. I use eSignal all the time. As you can see here, this is eSignal, right? But I do use Extreme Charts, though, for some of my end-of-day work. So, guys, if you're looking at true version of scalping, using a tick chart, 89T is 89 ticks. That's the equivalent of 89 trades. 89 trades go off, and it forms a new candle. There is no, notice the countdown clock isn't there because it's not counting down, right? If you had volume on here, let's see if I have it hidden on the chart. I don't. Right? The volume shows number of contracts, not number of trades, right? So that's not really giving you what's going on with the trade. So if we were looking at a real quick move on this, right, we just wanted to take a 5-tick trail on it. All right, so here's our trailing stop. It just has a 5-tick trail. We're underwater $5 right now. So I would be focused on trying to get to a break even and then looking at these bottoms of congestion as a place to scale out of the trade. So it's just a quick scalp, all right, and we're stopped out of the trade. It's that fast, all right? And that's where you're at with scalping. Scalping is not about I'm right a lot of times or versus wrong a lot of times. It is finding the right entry, and it's going back to the same trade. Guys, if you're a scalper, that's a normal move. You're back in and you're scalping this all over again right away. You're right behind it again saying, all right, I'm going to scalp it again. Now, is today's market a little bit too volatile for a 5-point trailing stop? It very well may be. You've got to go back and start looking at when the stock is moving, what's the, using Wilder's average true range as an example could help you understand how much is it normally moving on a candle. Well, you see that it's normally moving, 30 ticks, and you're trying to put a trailing stop of 4 in there or 5, it's too tight. It's too tight. So we originally were in this at 76. Right now it's at 69, right? And look, see, as I said, you have to go back at it again, and we'd be right where I was looking, 67, as your exit there. So Joan said, when do you use the 89 tick or the 5 or 15, not tick, Joan. I never use 5 or 15 tick. I think you meant to say 5 or 15 minute in the trades. The tick chart is only used as a scalper's tool. It's the only time we use a tick chart is as a scalper. I primarily use minute charts, not tick charts for my setups. You're quite welcome, Joan. That is just my overall preference, is a minute chart versus the tick. Let's see. Daniel said, Rob, what I am teaching tonight, you would have locked up already 30 to 35 points and sitting on 40-point profit with your other contracts since 12:15. Will be easy to see after I explain it. So guys, what Daniel is saying is if you have an interest in learning this double Bollinger system, you should get yourself into tonight's E-mini think tank. All right, think about it. And I can tell you right now that, let me see. Daniel's normally on his trades is 4 contracts. So if he's got 2 contracts right now that have 30 to 35 points, let me do this. Watch. If he has 2 contracts with 35-point move, that's $350, right? That he's locked in already. He's got 2 other contracts that have 40 points in them right now. That's $400. Understand that's $750 using this basic double Bollinger system that he wants to talk about tonight. And guys, Daniel, how many of these trades are you seeing? How often are you picking up on these? Scott wrote in Daniel and Kevin Rock. Yeah, I mean, they're 2 of the students that are knocking it out of the park right now. 4 to 9 a day. On a 5-minute, okay, I get it. On a 5-minute chart, 2 to 3 a day. Daniel's also using tick charts where he catches them a little more often. So guys, if you had 3 times a day that you were up $700, that's $2,100. I'm going to tell you right now, if you had it one time, you just pretty much paid for the quarter of market of the think tank, of the E-mini think tank. So, something to think about. So Joan said, so when you are scalping to exit a trade, you use ticks, is that correct? When you have a trade on, you use minutes to exit it. Okay, so Joan, if I'm sitting at lunchtime here and I just want to trade, then I'm going to use a tick chart and scalp the market. I'll use an 89 tick for the YM. It's slightly different for the ES, but yes, I'll use an 89 tick. I will use all other technical analysis techniques at my disposal, rectangles, supports and resistances, all of that. All of that is going to be the exact same. The minute and the 5-minute chart are more when I'm trying to pick up a little bit of that trend, or that longer term trade. So right now, remember, we've already been in a scalp trade. Right now, if we're 25 seconds away from this 8-period moving average, right, for this candle closing. If we close right where we are, I'd like a little higher, but if we can close up near the 8 and roll over, that's where I'm using more, Joan, of the 1 or the 5-minute candles as my entry technique. And I'm looking for a little bit of a longer term trade than I am with a scalp. A scalp, I'm looking for 5 or 8, maybe 13 ticks, 13-point move, and I'm done on the scalp trade setup. So hopefully that answers it, Joan. Is that good for you? And you can just give me a 1 for yes, 2 for no. All right, so guys, we're failing right now. So there's an opportunity where we were at the moving average and failed right at that 85 level or so. Right now, it's about a 10-point move. Okay, good. I'm glad, Joan. So you got about a 10-point move right now. See a little longer picture, longer term. I'm not rushing into the trade. I'm taking my time. Scalping trade is more in and out, right? A lot more of the in and outs. This is more of planned, a little longer term. Guys, coming up, just so you know, in the E-mini Trader Talk, in that think tank, I spoke to, while we were in Chicago, the gentleman who is the foremost expert on trading the VIX is going to come in one night. He teaches on Mondays, but he's going to work around his teaching schedule because he does have certain Mondays off, and he's going to come in with us and teach on how he trades the VIX and the things that he does, which I'm really excited about. And then we've got others that are going to come in as well and do some teaching. We've got Ed, who's here with us today, who has been asked to show a little bit what he does with his scalping trades. And again, that's what makes it the think tank, guys, is just that. Is that it's not just one, it's a band of many. So I wrote Whirlpool down. I don't remember who asked for it, so I'm sorry that I didn't catch that. I didn't write that down. but the question came up of, can we look at Whirlpool? So let's go look big picture first. So Whirlpool has been on an absolute tear down, but a tear right about in here. Whoop. Let's see. Yeah, so we could probably double line this. Yeah, wow, look at that. Okay, so great downtrend going on there. Let's go put one more in and see what we have on these bottoms there. Big picture, but I think we're going to have more of an interim trend in there as well. Yep, so if you look at inside of here as, you know, between the two inner lines as the main part of the trend, and then down at the very bottom line at more of the outliers, same at the top, more of the outliers, right, is a way I would look at it. So right now, you know, we may take that little continuation pop back up, and if we do, we're looking for that move up to about that 148 level and, you know, 146 level, and maybe fail from there. If it does fall further, I'd watch that bottom trend line. They have earnings, they just came out 2 days ago. Okay, so Debbie said, oh, okay, well, I appreciate that. A plug for your class, Rob. I go to work from 2 to 6 so I can be home for the E-mini think tank. My supervisor knows no working past 6 p.m. on Monday. One of my highlights of my week is your class. Well, that is awesome, Debbie. I appreciate that very much. And guys, it's a different environment. Come on in and check it out. It really is a much different place than you might have been before. And here's the thing. Anybody that's training the E-minis will tell you, with the way that I teach and the techniques that we use and the things they learn in the think tank, they will tell you that it has made them better options traders along the way. All right. So guys, that's tonight, right? So that was the last of the symbols I had on my list that you guys were looking for. So just out of curiosity, let's see. Ah, look at the fail. Boom. That's, Joan, where I'm using the 5-minute candle or the 1 minute, not the tick chart. I'm looking for bigger moves, right? I'm targeting somewhere down about this 35 area-ish. And right now we're at 62, so there's a huge potential considering we're in about 85. Right? It's just, you're in an 85 right now, it's at 65. That's a 20 tick move. That's $100 in that one little move right there. That's $100 for that one candle. So excellent. All right, ladies and gentlemen. So join us tonight at the E-minis. Give a phone call to the office. They'll be more than happy to get you guys set up there. And with that, you have a wonderful day. God bless, and I'll catch you all tonight. Take care, folks. Bye now.